Covered calls, cash secured puts, put credit spreads, call credit spreads. These are some awesome strategies that you can use when selling options to create additional income on a weekly basis, a monthly basis, whatever time frame works best for you. Hey everyone, welcome to another video and welcome to Valley Green. Today is May 2nd. If you're new to the channel, welcome. If you find value at the end of the video, we'd greatly appreciate it if you could like and subscribe. It really helps out the channel. It's newer, it's smaller, so we're still growing. Hope you enjoy the video. Like I mentioned up front, I'm going to walk through some option strategies that you can utilize today to create weekly or monthly income. I'm going to talk through examples that could work with smaller accounts, larger accounts, and at the end of the day, you have to determine what price points and strikes work best for you. These are just examples to help you upon your journey of selling options. So the first stock we're going to take a look at today is Amazon. I'm sure everyone knows Amazon. As you can see here, the chart has definitely come downward over the past year, but somewhat stabilized around this 102, 110, and now we're at 103 price points. So let's take a look at what you could trade with Amazon. Jumping over here into the option chains, the first thing I'm going to do, I'm going to trade an option here about 45 days out, about the third week in the month. So I changed the expiration date up at the top. And as a reminder, I'm in Robinhood, so this is the platform. I really like the user interface. If you trade on other platforms, let me know down below and let me know what your thoughts are on those platforms. So let's take a look at selling puts. I think personally buying Amazon at $100 or below $100 would be attractive to me from a long-term hold perspective. If I were to sell a put on Amazon, this is what it's going to look like. So let's say from a long-term perspective, I want to buy Amazon at $100, but it's currently trading at 103, so there's nothing I can really do right now. That's not really true because you could sell a cash secured put. So you may be asking, what is a cash secured put? So effectively, you are selling an option and someone on the other side is buying an option. So what you're selling is you're selling the right to someone put you 100 shares of Amazon at $100 if you sell this. And what's going to happen is, let's say you sell this today, you're going to sell the June 16th expiration for $100. Someone's going to pay you $3.15 per share today to eventually, potentially, have to purchase 100 shares at $100. And you may be saying, well, $3.15, that's not that much. But it's actually times 100 because in one option contract, if you're not aware, there's 100 shares. So one option is effectively going to earn you $315, $310. This is live because the market's open right now. So that's why selling cash secured puts can be amazing, because you can collect this income while you're waiting to purchase Amazon or any other stock at a price point where you think is a fair price from a long-term hold perspective. If you have a smaller account, the strategy that you could actually utilize is selling a put credit spread. So effectively what you would do here is you're now going to be buying a put at one leg lower than 100. So for this example, I'm just going to do the leg right below. So effectively you would collect $30 today, you'd be risking $100. So this is very friendly from a small account portfolio perspective. I'll get into more examples of that in a few minutes, so stay tuned. And the second example I want to cover is UPS. So the reason I want to show UPS is because they recently came out with earnings and significantly dropped after earnings came out. And you could argue it may be at a fair price to potentially purchase UPS. So what you could be doing here is similar to Amazon, is selling a cash secured put. And if you think the fair price of UPS is around 170, 165, let's take a look at what kind of premium you could get for selling a cash secured put 45 days out. So changing this, the expiration date to June 16th, let's say you are willing to purchase UPS for 165, so that's almost 15 points lower than where it's trading today. You could collect $1.57 or $157 for selling as one cash secured put. Personally, I think this is a good entry point and good strike price just because the return is roughly 1%, a little bit less than 1% of the capital that you would need required to purchase UPS. So given where the stock's been trading, this could be a great cash secured put to sell. If you want to be a little bit more conservative, you could go a little bit lower and maybe sell the 155. And there's probably a very small likelihood that UPS is going to drop to 155 in the next 45 days. And you can see here the delta's 0.07. That means there's only really a 7% chance it's going to expire in the money or reach that price point effectively. So very small percent chance overall. So if you want to be a little bit more conservative, 155 strike is the cash secured put you could sell. And if you did that, you'd collect $60 today. Now, taking a look at the third example, MongoDB. So they are a pretty much database platform tech company. And you can see here earnings are expected June 1st. So you have to keep that in mind when selling options. You have to monitor your options and the expiration dates if you don't want to be assigned. So just be careful when you're trading near and around earnings. So as you can see here, the stock had a high of roughly 370-ish, all the way down to the low in the past year around 141, but it's kind of been trending upward here, and it's definitely a growth company. So in my opinion, it could be a great option stock to sell some options on. And let's take a look at the cash secured puts here. So it's been on the upward trend, but you could be thinking, I don't want to purchase MongoDB at 220, I want to really purchase it at 200. Okay, great. So let's look at that cash secured put. So at the 200 strike price, if you were to sell this, you'd collect almost $1,200 today by selling this option. But before anyone jumps in, the very obvious thing to call out is that you need $20,000 to execute this trade, and this is definitely a large trade. So keep that in mind. This may not be the best stock to sell cash secured puts on, but there is something you can do, like I mentioned earlier. You could trade a put credit spread on MongoDB. So effectively, what you'd be doing is then now adding a second option to this strategy. So you'd be buying a put at a leg lower. So let's say you sell the 200, you'd be then buying the put at 195. So that's 5 points lower. So the spread is 5 points, the delta between the two strike prices. So you're putting up $500 of risk, and you'd be collecting $145 as a credit today. This is a much more effective strategy, like I mentioned before, if you have a smaller account. And again, you can be a little bit more conservative with these strike prices. So let's take a look at some other options here. If you were to sell the, let's say 185, and then you could buy the 180, you would get a credit of $95, almost $100 for putting up 500 of collateral. So that would be roughly a 20% return. Now, if you have a little bit more money to trade some options on, you could be a little bit more aggressive. And let's say you do 9 each. You could collect almost $1,000 today if you were willing to trade and put up $5,000. So that's, again, 20% return on $5,000. That'd be $1,000. So this is slightly under a 20% return on $5,000. But I think MongoDB is a great stock for put credit spreads or call credit spreads. Now, Nvidia, the next example I'm going to walk through. As you can see here in the 5-year view, there's been a massive run up. In the 1-year view, clearly a massive run up. So in my opinion, you could argue, it's probably likely time for Nvidia to have a pullback. That may not be your point of view, but that's just the premise I'm going to be going off of for this example. So for Nvidia, we're going to look at call credit spreads. So the premise of a call credit spread is going to be similar to the put. It's going to be 2 option contracts. So the first thing you have to do, obviously change the expiration. So for this example, I'm going to go out to June 16th, 45 days, and you're going to set it up similar to the put credit spread. You're going to sell a call, and then you're going to buy a call at a leg higher on the same expiration. So let's be a little bit conservative, and let's go for the 315. So that's pretty far up from where Nvidia is trading today. Gives us some space. So let's sell a call. So effectively, this is a covered call, but it's naked because I don't have 100 shares of Nvidia in this account. So that's the first step, is selling the call. So in theory, if you sold a covered call, you could collect $715 for this today, but that's not what we're doing. So now we need to add the second leg. So we're going to go to buy call. We're going to choose 1 leg higher. So in this setup, the total credit you would receive is $1 per share, so 1 contract, so $100. So this is exactly a 20% return for putting up 500 of collateral at risk for this trade. So a 20% return in 1 month's time frame, 1.5 months roughly, since it's 45 days. That's pretty solid. So again, you may be thinking, I want to be a little bit more conservative. 20% seems fairly aggressive. that's totally fine. Just change your strike price, go a little further out from where you think Nvidia will or will not reach. If you look at the 315, the delta is 0.28, so roughly 28% chance it will expire in the money. So you could argue you want to be conservative, then look for a delta, 0.15, 0.1. Those will be much more conservative options for you to trade. And now those with smaller accounts, let's say maybe under $5,000, American Airlines is a great stock that you could either, one, sell cash secured puts on, or sell put credit spreads if you're willing and want to purchase American Airlines. So let's go look at the options here. Let's go to put, sell, and we have to look at the expiration date like usual. And taking a look at the options here, you could sell an American Airlines $12 cash secured put and collect $23 today. So if you have $1,200 and you're willing to purchase American Airlines at $12, significantly lower than where it's trading today, you could use this strategy to collect over a 1% return in 45 days as a means to, one, collect extremely passive income while setting up a trade that will allow you to purchase American Airlines at a significantly lower price than where it's at today. If you want to be a little bit more aggressive and you're like, well, I'm willing to purchase American Airlines at 13, you could use this strategy and collect almost $50 today. So again, like I mentioned, American Airlines is a great example of a stock you can utilize to sell cash secured puts on if you have a smaller account. And now the last stock I'm going to cover is Pfizer. So Pfizer is a dividend payer, pharmaceutical company. So it's a little bit different than some of the tech examples I've been giving. The yield is 4.11%. I think they've been increasing their dividend consistently for the past 12 years. So overall positive signs to see that consistent dividend growth. So in my opinion, Pfizer would be a great addition to a portfolio, whether you're a small account, large account, a dividend payer, pharmaceutical, large player in the space. So let's look at some cash secured puts on Pfizer. So going 1 month out, 45 days roughly, if we want to purchase Pfizer for $35, even $37.50, so about a point lower than where it's trading today, you could sell this cash secured put. You could collect almost 2% for selling this cash secured put over the next 45 days. So you can create your own dividends with this stock in the meantime while waiting to purchase the stock. If you want to be even more conservative, you could sell a 35 cash secured put. You could collect $25 today and have the option to purchase Pfizer at $35 if the stock goes that low. If not, this credit stays in your account and nothing happens, and then the next month you could just sell another cash secured put and just use that as a mechanism to continually create your own dividends in a sense. So I hope you liked the video. That's going to wrap it up for today. Feel free to leave a comment down below of any stocks, other options you want me to cover. Hope you have an awesome day, and I'll talk to you soon.